Hi, welcome to Trading with That here. So in this episode, I want to discuss some of my trades that I did over last week. This is a recap on the $130 challenge. And if you like content like this, please subscribe to the channel and ring the bell for any notifications. You'll get each new episode. And with this one, I was trying to do screen capture, and for some reason the internet's kind of stopped working, so I can't even look at the charts because Thinkorswim isn't updating the charts, and my screen capturing software needs the internet connection to connect to my phone, so that way I can use that as a camera. So right now, that's kind of out of the question. But I'm going to go over the tickers and the dates, entries and losses, and kind of my thought process in each one. So the first ticker that I traded was SCPS, and that was on 524. My entry level on that was 1263. So it was kind of forming an ABCD pattern underneath the VWAP, and I put on a tight risk on that one. About 2.5% was what I was risking on that, and I was looking to more lines of learn how to trade the bracket orders. I've never really used the bracket orders in a live trade before. The past couple of weeks to try to identify whether or not I'm setting them up correctly, but paper trading versus live trading are slightly different. So when I paper traded this one, I wanted to see how they're going to be functioning, whether or not I set up my parameters correctly on them, and if it hit my risk, would it get me out of the risk? Because this trade was more to also see about scaling in and scaling out of the trade. So I had a 3-tier bracket order on it. So if it was go up in different tiers, 30%, 40%, 60%, it was going to scale me out of that trade. When it came down, I didn't want it to scale me out of the trade in the same manner. I wanted to just, once it hit my risk level, I wanted to be out of the trade with my entire position. And so that's more of the lines of what I was trying to accomplish on that one. If I made money on that one, that's great. If I didn't, that's also fine. So it turns out on that trade, I did lose $2.93, about 2.5%, not a big deal. The next trade that I was looking into was EXPR. That date was on the 26th. And I had 27 shares on that one. I took a total loss of $3.24. This trade was kind of frustrating. With the tracking the data, I've been looking at breakouts and ABCD patterns, and the breakout patterns have a potential of about 50%, and ABCD patterns have a potential of about 40% gains. So I wanted to try to gain more consistency so that way I'm profiting more versus taking one big profit once or twice a week. So I wanted to see how that was. So I was actually aiming for 15%. And so EXPR came up to 14.13%. You pulled right back down. I had my sell target at 15%. When it pulled back down on this particular trade, I thought, there's still maybe 40 minutes left of market. I thought I maybe can try to retest that, or maybe the next day I could try to break out over that and retest the resistance from the past. So I ended up moving my sell order 1% higher. And even though I moved the sell order 1% higher, it never got higher than that 14.13%. So it would have never even reached my 15% price target, which is absolutely, fine. It was kind of frustrating, but one of the problems that I had was I anticipated more money out of the move. I anticipated a bigger gain. Even though it was a 1% gain, by me moving my sell order up higher to anticipate more money, that's something that I shouldn't be doing. And in your own trading, if you're watching this, if you're in a trade and you're thinking I'm going to take 10%, 15%, 17%, or I'm going to get out right now, and you start to think to yourself, well, there's a potential it can go up higher. Even if you're right on the trading, if it does go higher, you want to stick to your original plan. If your original plan was to take 20% or 10% or 15%, you want to stick to that. You don't want to wait to see what may happen next in the market. There's a couple of different reasons for that. If it does go up higher than what you anticipate, at what point during that trade are you going to be comfortable with taking that profit? Are you always going to be going, well, I want more because it gave me more last time? Because it may not keep going up. It may only go up another 5%, 10%, or even 20% from the original sell price, but you don't know where it's going to go up to. And a consistent trader identifies a sell target that they stick to before they enter into the trade. So even though it was only 1% difference from where I originally was looking for, it was still a trading error. So that's something I got to be mindful of going into this week and going forward. The next trade that I was trading was KOSS, and that was on the 28th. So I took 2 trades on the 28th. Both of them were very small size, of 4 shares apiece, so nothing really big. They were both trading errors as well. Traditionally, I don't trade pre-markets, but I kind of already woke up around 4 o'clock in the morning for no particular reason, and I just couldn't sleep. And so I was already kind of excited for the day. And that day I only got about 2 hours of sleep, and I was just couldn't sleep for whatever reason. So at 5 o'clock in the morning, I decided to sit in front of my computer, see what was moving, and these 2 were already ones that I had on my those 2 tickers were ones that I already had on my watch list and was kind of watching for the day. They had breakouts pre-market, and I bought into KOSS at 25.51, which was right above its breakout. And when I bought it, it went up, pulled back, and bounced off of 25, and then I bought into it, and it kind of came back down a little bit lower. And where I put my risk level on that one, I wanted to give it just a little bit wider of a risk compared to what I normally would in an open market. And the reason was because of pre-market. I know sometimes pre-market bid and ask can be a little bit further apart. So I placed my risk at about 4.94%, so just under 5%. And so it never really hit my risk during pre-market. But as soon as market opened, it kind of ripped up. And it did actually go pretty strong for the first, maybe 10 minutes of the market open. And it got as high as 13.17% right after I bought into it. And I was still aiming for that 15%. So they're getting really close to actually, 2% away from, getting to give me a feel on my exit. And most of these are just 1 to 2% away from actually reaching my sell target. So I do think I'm still on the right track. There's other tickers out there like LEDS and MOXC that had massive moves, 80, 100 to even 200% of their breakouts or their moves. So I don't really think that aiming for something smaller like 10% or anything like that is going to make much of a difference. If the market's not going to really, that's fine. I mean, I can go for a 10%. I can go for a 10% sell target, and yeah, I would have had 3 winning trades in a row, and that would have been $30, which is understandable. But when I'm trading, I want to stick to a sample set, and with this sample set, I'll be doing 20 trades. I have 16 more to go, and with my results, I'll keep going with the same thing. I think by reducing the amount percentage down to 10%, and it's possible I could be making more money during that time, then I'll actually analyze that and reevaluate it at the end of this sample set. So even though this is the end of the month, starting tomorrow, I'll be looking at doing the same thing, going in for a 15% price target. One thing that I may be doing is scaling out. I think if I was to scale out at 10% and then the rest at 15%, that 5% difference with a small account really won't be much. It maybe be a couple of bucks. But it does mean that when I actually get out of the trade, I'll be profitable and I'll be consistent on that. So even though if it comes down, half my position will be out at 10%, and then the rest of it will actually get me out for a small loss or even a break-even amount. So I may end up, instead of taking a $2 or $3 loss, I may end up taking a $4 or $5 profit. So that's something I've been debating about. I don't really know if it really matters. Scaling out of a trade with such a small account, a lot of people go, well, you want to wait for you to actually have a bigger account to scale out with. And I do agree with that if you're trading with OTC trades. OTCs are pink sheets, and they do, most brokers that I know of, they do charge commissions for those type of trades. And for myself, I get charged $4.95 for an OTC. So if I buy and then I sell, my entire position, that's $10 in just commissions right there. So with the small account like I have now, if I'm aiming for 15% and I'm looking for a $16 profit or $17 profit, if I buy and sell, I'm making $6. 10 of that's going to go to commissions. So it's not really worth it to do that. But with listed stocks, a 15% profit on $100 stock or 15% profit on a penny stock is still 15% of however much money you put in there. But with the listed stocks, I don't have any commissions, so I can scale out of the trade, and it will minimize of how much money overall I can make on the potential move. But it also means that I'll be able to pocket a little bit more money overall, and that's kind of the direction I may be thinking of. I want to kind of reevaluate that, determine based off the sample set if that's something I want to do. Right now, I don't want to change anything to the sample. I'm going to keep it consistent, gather the 20 trades, analyze the information, and then the next sample, if something needs to be changed, I'll go ahead and change that. If that means scaling out at 7%, 8%, and the rest at the 15%, take half and half. That's also fine. If I want to go for 10% and 15% and let the 5% difference do it as well. That's also something I want to come down to at the end of the data set. So that's pretty much it for this episode. If you do like this type of content, again, subscribe to the channel, ring the bell so you get the notifications, and click the like button, and leave any comments if you have any questions, if you're, want to know a little bit more about this strategy. And that's it for this video. If you like this type of content, subscribe to the channel, ring the notification, ring the bell so that way you get notifications of new videos coming up, and leave a comment and like the video if you do like the content. It helps me understand what you guys are looking forward to, and leave any comments about what you want to learn more about in the future. If you have any questions about my style of trading, or if there's anything that you want more clarified about what I talk about, then I can go over that in an upcoming video. And that's pretty much it.